Good morning to all traders and welcome to this Friday's Market Insights video on FX miners. As the battle to the US election continues, we are seeing the markets taking dramatic turns. Now, yesterday, we've had a weakening continuing of the dollar, of course, in response to the latest states that Biden was able to win against Trump. He is now only 6 electoral votes away from winning this election. Markets have adopted a risk-on stance, and hopes of fiscal stimulus are increasing in order to counter the impact of the rising cases of coronavirus in the US. And with Fed indicating that more stimulus is not coming from the bank itself, then everybody is now turning to the only tool left, which is who the next US president is going to be. And because that really is going to be the factor on whether we get a stimulus package at all, or even a stimulus less than expected. Now, the Chinese renminbi, the yuan, is the one that has been very hot over the past few months, as you can see from the 7 level back in, well, I think we are looking at July, which indicates to me that Biden presidency was pretty much priced in, if we take into account as well that Biden has pledged to really restore all relationships, and that includes, of course, the relationships with China. Now, apart from the Chinese one, obviously, I'm going to talk about the pound, the euro pound, because we've had the Bank of England announcing that it would create another 150 billion pounds in order to purchase government bonds. At the same time, we've had the Rishi Sunak, the Chancellor, announcing that the government's furlough scheme is going to be extended until March. Now, that said, we are going to have a quick look on USDCNH and EURGBP. I would also pay attention, of course, to what is really happening with the US elections, because there is a lot of talk around the legal challenges that Trump has put in front of the US Supreme Court in an attempt to halt the vote counting based on his claims that there is fraud. Now, jumping on dollar against the CNH quickly, we haven't looked at this for a while, to be honest. We were expecting this upside move over here that ended back in March to create indeed an impulsive move to the downside in a primary degree, and this happened. It extended, in my opinion, in a that sort of structure, and it looks like we ended now wave 5 around the 61.8 Fibonacci retracement of wave Y. Now, this to me looks like an impulse move that is heading down to wave X, because I'm looking at this move in the longer term as a WX, Y, X, and Z pattern, right? Which means we are expecting an ABC over here to complete wave X and then continue up in wave Z. If that's not the case, then instead of an A, we're going to have a 1 over here, and that will be an impulse to the downside, which is, of course, going to have a much more detrimental effect on the downside. Now, the 61.8 was done, okay? But I'm also looking at the indicators, the RSI and the MACD, and looking that maybe there is a little bit more room to the downside to take out the 200 Fibonacci extension of waves 1 and 2, primary waves 1 and 2, right? Because that brings us down to 6.56. The 161 extension, it's 6.65, and that was wave 3. In a very short period of time, I think, even if not like intraday, from today onwards, we're most likely going to see prices start moving higher, right? That will be for wave B and for wave C, at least for the scenario that we're looking right now. If we take the 38.2 Fibonacci extension of wave Y and also the 38.2 Fibonacci extension of the the cycle wave A, we have a very nice cluster around 6.82. So I would be expecting to get to that level at least, and whether we are breaking higher is going to depend on, well, the initial rejection. We're probably going to see a rejection or a breakout, right? A rejection could probably bring us down here and then continue up, or it would mean that we are going to continue lower. Whereas a breakout without a false breakup here most likely will have us continue perhaps to the 6.89 or even to the 61.8 Fibonacci retracement of wave A around 6.96. Now on Euro Pound, well, it looks like, don't forget we're on wave primary 2 here. So this is 1 and this is wave 2 of a part of primary wave 3, right? Now, I was expecting this to move sooner than this, right? Or up. Now, with this sort of structure remaining on a sideways bearish biased downside market, I would say, I think we're going to turn into a triple zigzag over here for wave 2. This would make a very good opportunity for a potential buy down at the previous wave 4 at 0.8868, okay? This is very close to the 0.89, which is the Fibonacci, 61 Fibonacci extension of wave 1, right? In case, of course, we break below the next level to look as a support will be the 0.88, because this would invalidate, if we break below that level, it would invalidate this structure as an impulse. So I'm expecting the X and the Y, okay, and I'm expecting to see a rejection at the top regression channel over here and a continuation down. In case we break higher, okay, it could be still part of wave X, because it could be a complex pattern. In wave X, we could have like some sort of extended ABC over here. We can even look at the previous X to be some sort of validation for us. But we could even get up to 0.9171 and still be bearish, right? I need to see a valid break above this level and then the previous high of 92.91 to start to really validate the bulls in the long term. But for the short term, I'm looking at this. I will be looking at this Fibonacci extension retracement here, 0.661 level, which we've just retested to potentially send in prices a little bit higher, okay, which is also supported by the MACD and RSI with 2 signals looking at an upside bias. Thank you very much for watching, guys. Do not forget, we have also the NFP today. It's not going to be as massively affecting the markets as usually, because we have the US elections taken into account. However, there might be a few opportunities for 20-30 pips max, okay? Have a nice weekend and we'll speak again on Monday.